You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. It's June 29th, 2021. Well, if you've ever had an instance where you feel you've been defrauded or your broker has screwed up and lost you a boatload of money, then you are going to want to hear from my next guest. I promise you that, because he specializes in getting you, recovering your hard-earned lost dollars. And he's been doing this for a long time. He started out, he was 28 years old, got a runaway verdict at 32, and he hasn't given up since. His name is David Meyer. And if you got a question that you'd like answered either by myself or David, just send an email to me, Kerry Lutz, KL@kerrylutz.com. Well, David, welcome to the show. So this is a highly specialized, complex field specialty of the law, and you've been doing it quite a while. How'd you wind up doing this?
Well, Kerry, it's great to be here. Thanks for having me. I love what you're doing with your show and your podcast. I don't have a traditional path to becoming an investment fraud lawyer. I actually grew up in a small town in the state of West Virginia. And during college, I was a whitewater rafting guide. I was also juggling fire on the boardwalk for extra money. But I eventually made my way to law school. And I grew up, my father was a personal injury lawyer. So I grew up with a father that was a trial lawyer representing plaintiffs. Now, his work was a more traditional plaintiff's personal injury business, and I wanted to do something a little bit different. So started in the state of Ohio at a law school. I was actually a tax lawyer. So in law school, I got a joint JD. I know you're a lawyer as well. I got a joint JD LLM. So about 6 months after I graduated law school, I also graduated with a master's in tax law. So my first job actually at a law school was to be a tax lawyer. And I realized pretty quickly it just really wasn't for me. I mean, reading the tax code all day, every day was just not really something that I had a real passion for. So I started just doing some litigation at my business firm. I got really lucky. You know, you probably know this, but as a young trial lawyer, particularly now, it's really hard to get actual trial experience as a trial lawyer because most cases now settle. So if you graduate law school now and go to either a medium or large firm as a litigator, you know, it's going to be a long time till you get in front of a jury or a judge. And that's disappointing because, you know, that's how you get experience. And I was lucky as a young lawyer. I was trying cases all over, jury trials, bench trials, not in the investment field, but just trial by fire, as I say. And eventually a case was referred to my boss. I was only 28. No one was referring me cases at that point. I was an associate at a small but nice little law firm. A gentleman walked in the door, was referred to my boss. He had problems with his stockbroker, and my boss actually turned down the case because that's not what we did. And I remember this, Kerry, like it was yesterday. This gentleman was walking out the door, and I was going to the copier, and I literally ran into him and just sparked a conversation. You know, what's your name? You know, what happened? And he just kind of just sat there and said, "Look, I'd love to tell you my story." And it was interesting to me. I was interested in finding an area of the law that was just new, a little bit different. And this sounded like something interesting to me. This was in the beginning of the internet. This is 1999, actually. And I was digging in a little bit. I learned about what duties stockbrokers owe their clients and the avenues for recovery. And so I just sparked a conversation with him. And he said, "Look, this problem that I had, David, didn't just happen to me. It happened to a lot of my other friends. And I'd really like you to come meet with them." So I drove up my beat up used car that I had. And I drove up about an hour north of Columbus, Ohio, to a town called Marion. And I walked in, and there were 75, 80 people there, Kerry, all of them similarly situated. All of them had a stockbroker at Prudential Securities in Marion, Ohio. They're all retirees. These are all retiree line workers from GTE and similar jobs. And one day, the stockbroker in October of 1998, this was 6 months prior to that, woke up one morning and he had a great book of business. This gentleman was living the good life. He was golfing, he was hanging out. He had a big book of business, managing retirees' money, just asset allocation, wasn't complicated, had a great job and was well respected. But he woke up one morning, literally thought the world was going to end. Chicken Little, skies falling. He liquidated tens of millions of dollars of his clients' money without authority, illegally, in one day, put them on a cash. He didn't steal it. He thought he was saving their money, put them all in the cash. But what happened, as it turns out, the next day, the stock market started going straight up, like straight up. And all these folks were in cash. So and Prudential knew that their broker had committed all these unauthorized trades. And they determined, and we've learned this in discovery in the course of litigation subsequently, they determined 2 days later after the sales, they could have spent $2 million to buy back all these positions that had increased in value and put everyone back to where they should have been. But they decided instead of spending that money, they were going to send a bunch of suits, vice presidents from New York to Marion, Ohio, to convince everyone to ratify and legally accept these unauthorized trades so they could get out of it. Long story short, I mean, they just defrauded these people. They were lying to them, just trying to save a couple $1 million. So we filed a class action. The case took about 7 years from start to finish. We got a $260 million jury verdict. Spent a month in trial, away from my family, and with the team of lawyers we put together. Got the largest jury verdict in Ohio, and the verdict was ultimately reduced by the Court of Appeals to $30 million. But at the end of the day, 7 years later, we recovered more than 100% of all of our clients' losses, plus attorney's fees. So that's how my my career as an investment fraud lawyer started. I started my own firm in the middle of all that, and have been doing this kind of work ever since, Kerry.
Yeah, that's a great story, David. And just imagine if the guy was right that the market was headed for a crash and he liquidated all their accounts, you would have never gotten the case.
So that's true. And it's an interesting point, Kerry. So it still would have been illegal. It still would have been unauthorized, but there wouldn't have been any damages. So it wouldn't make it right, but you're right in the sense that there wouldn't have been damages. And the worst part, it's always the cover-up's worse than the crime. The crime was unauthorized trades. But Prudential knew about it instantly, and they could have put people back, rebought the positions, spent a couple $1 million, apologize, and nothing would have happened. And that would have been the right thing to do. But it was the cover up to try to hide it and lie to all their folks, which is what caused the punitive damages, which was the bulk of the verdict against Prudential that we won.
Oh, that's a great story, David. And in that case, justice prevailed. But, in the judicial system, justice and the courts are distant cousins often at best. So when you look at it, now everything goes through arbitration, right? Mandatory binding arbitration. And it's hard to get an unbiased arbitrator because arbitrators get paid for arbitrating, and they're getting paid pretty much by the brokerage house. So they don't get rehired when they're coming up with adverse decisions against they don't want to bite the hand that feeds them.
Well, so a lot of that's true, but there's a lot to unpack there, Kerry. So first of all, it is true that everyone who opens up an account with any brokerage firm in the country agrees that any disputes they have must go through mandatory arbitration. The only exception to that is a class action, which is why we were able to do what we did. So unless the same thing happens to a bunch of people, you're right. Individual cases go through arbitration. That arbitration in the brokerage firm context is administered by FINRA. That's the Financial Industry Regulatory Authority. And that's what we do. We're FINRA arbitration lawyers. But to your point about arbitrators, look, they're not all bad. And the key here, and I talk about this in the book I wrote, is about hiring a lawyer that knows what they're doing, who has the resources and the infrastructure and the experience and the relationships. I mean, we dig in. It's like jury selection for every case. But if you hire a lawyer that's got 1 million cases and they're working out of their mom's basement, they don't have time to really dig in. And just like in a case for a jury, the most important case for a jury trial is who's the jurors, right? Well, oftentimes in cases here in arbitration, the most important factor that will determine the success or the end result of the case is your arbitrators. There's a process, and on behalf of the plaintiffs bar in this industry, and I'm president of the Public Investors Advocates Bar Association, PIABA. That's the bar association of lawyers that sue brokerage firms for investors. I'm the president. We do a lot of advocacy work, a lot of lobbying work. We work with FINRA. We fight against, to better change investor protection with SEC. So the lawyers that do this every day, that have the infrastructure, the resources, the relationships, and when we dig in to make the arbitration selection process and ultimately get the fairest arbitrators as we can for our case. But that's the bulk of the work, and that often gets overlooked by folks that are looking for lawyers in these cases.
Interesting. So, David, what types of cases do you encounter? Obviously, unauthorized trades. I know that happens fairly often, but there's other types of infringements as well.
Yes, Kerry. So look, we do see theft. We see Ponzi schemes. There's unauthorized trading. There's churning. But the bulk of the cases that we see, most of the folks we represent are retirees or near retirees, folks in their 50s, 60s, 70s, or 80s who've worked a lifetime to save the money so they can then, go retire from their work, be able to spend time with their family and travel and benefit from their decades of hard work in the retirement years. And most folks at that point want to hand over their life savings to someone they trust, who has the experience, the expertise, the training, who's properly supervised by a brokerage firm to properly manage their money. Most of the cases we see are profiles of folks like that who turn their money over to a brokerage firm, and then who, unfortunately, their broker, for whatever reason, ends up recommending and implementing an investment strategy that's inappropriate for them. So most of our cases are breach of fiduciary duty, negligence. Maybe they're investing inappropriately in too aggressive a portfolio, selling them private placements or alternative investments that are inappropriate and that are risky and that lose money. So most of our cases are in the negligence, breach of fiduciary duty avenue. And then, of course, we have the breach of the failure to supervise for the brokerage firm, who's obligated to supervise their brokers to make sure they're complying with all the rules and regulations in the industry.
Right. So what's your average claim these days?
So our average claim is probably several $100,000. So, a typical client who works, again, 30, 40 years, saves $1 million or a couple $1 million or a few $1 million, invests it, and then maybe loses a third of it or 40% of it. So I'd say, $300,000 to $600,000 is probably a typical. We have cases as small as 100,000 right now. In fact, I was just reviewing before we started a claim that we're going to file tomorrow on behalf of someone who lost $18 million. So, it goes from anywhere from 100,000 to, many millions of dollars. I settled a case about 5 years ago for a 101-year-old widow. We recovered $31 million. In fact, I start my book about that case, and the settlement check for $31 million is actually hanging up in my office. Just a reminder of, the big stakes that are at play here in these cases.
Oh, that's remarkable. So, hey, when you win a case, does the brokerage house have to pay your attorney's fees?
Don't just survive, thrive. The Financial Survival Network.
Today's show is brought to you by Mustango River Resources. Their flagship projects are located in Kirkland Lake, an established gold camp that has historically produced over 70 million ounces of gold. The Kirkland West project is a high-grade gold project beside Kirkland Lake Gold's world-class Mikasa gold mine, one of the highest-grade mines in the world. The Umeja project is an advanced stage project with 600,000 plus ounces of gold along the Cadillac Break, 25 kilometers east of Mikasa. Their projects have the potential to transform into another world-class mining camp in the Kirkland Lake District. Make sure you go over to Mustango.com. That's Mistango.com. Take a look and sign up for notifications. Stock is traded on the Canadian Stock Exchange, ticker symbol MIS. For more information and to sign up for notifications, go to Mustango.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
So that's a great question. We, in most cases, if the facts call for it, we do seek attorney's fees, but the availability of recover attorney's fees really is based on the state law where the investor resides. So we're always looking in arbitration for these cases. We don't go to court, so we're nationwide lawyers, and we have to follow all the state laws with respect to filing cases. So we're filing cases all over the country, and we're always looking at the state law. So some state securities laws provide for recovery of attorney's fees, It's mandatory in some cases. It's discretionary in others. And some states, like the state of Ohio, for example, doesn't have a provision for attorney's fees. There are equitable arguments. In fact, I just had a case. I tried the case to an arbitration. In fact, after the pandemic, the first case I tried live face-to-face here in my office was about 6 weeks ago on behalf of a 75-year-old retiree widow who invested all of her life savings with a very small investment advisory firm. And we did recover, attorney's fees in that case. So there are instances where you can recover attorney's fees based on equitable issues and sometimes the state securities laws. So it's really a case-specific issue.
I guess if it's really egregious, where it's gross negligence or just malice, then in those instances, probably have a better shot at recovering attorney's fees.
That's true. That's true, Kerry. Yes, indeed.
Yeah. So do you think that the ethics of the brokerage industry out there are declining, or is it just more of their clients who've been burned are out there hiring people like you?
Well, so I think 90% of the financial advisors out there are honest. They do the work they're supposed to do. The problem is you've got over 1 million financial advisors, investment advisors out there. So that, the bad 5% or whatever it is, unfortunately, can cause a tremendous amount of havoc. So, we're dealing with just the worst of the worst. The problem is, and this is one reason why I wrote the book, there's a lot, most of these cases, in my opinion, most folks who have claims, legitimate claims for investment losses caused by the misconduct of the brokers never do anything. Either they don't realize that there's an avenue to recover. They sometimes don't even realize they've lost money. And then we take financial issues personally. It's very private. The analogy I use all the time is that if we're sitting at a red light in a car and we get rear-ended and we suffer legitimate injuries, none of us have any problems about, researching, talking to people, getting a lawyer, hiring a lawyer, and filing a lawsuit to pursue the recovery of legitimate damages that we've suffered. We're not ashamed by that. We're not embarrassed by that. But when it comes to money and financial issues, most people, particularly elderly people. Remember, most of my clients are elderly. And if you're elderly and you're maybe by yourself, maybe you've suffered some cognitive decline, oftentimes when you lose money, they're embarrassed. They don't want to admit that they've lost money. They blame themselves inappropriately. It's most of the times, look, it's never your fault if you trust somebody and they do something wrong. We trust people to handle all aspects of our life. Life is complicated. We hire doctors, we consult with doctors, accountants, people to fix our car. There's nothing wrong with looking to hire a professional to manage your money. And when something goes wrong, there's no reason to blame yourself. But I see this all the time. Typically it's a family member or a friend or a trusted advisor who's got to talk to the individual and convince them that, look, there's nothing wrong with seeking out legal help if you believe you have a claim. But I believe most cases aren't even pursued, one, because of what I talked about, just the embarrassment and the privacy and people that, living alone, they don't want to tell their kids they've lost money. Maybe they don't have anyone to tell. I think that's a big problem. Also, the brokerage industry, makes it very difficult to pursue a claim. Again, I talk about this in my book, but a lot of times if there's a problem, the first reaction for people is, look, if I think I've got a problem in my brokerage account, I'm going to call the broker. I'm going to call the brokerage house. But the problem with that is, as soon as there's any concern or problem with your account, you become an adversary relationship. They're no longer looking out for your best interest. As soon as you alert to a potential problem, they're going to circle their wagons, protect themselves. Now it's them versus you. So they're going to claim that they do an investigation. They're going to write you a really detailed letter that says they did a thorough investigation and there's no claim. I see that all the time, which is why in my book I tell people, if you think you have a claim, do not call your broker or brokerage firm. Call somebody independent, call a lawyer, call someone outside who can give you some counsel, because the brokerage firm at that point is no longer looking after your best interest. They're looking to protect their own interest.
Yeah. Effectively, once you contact them, then you're giving them a chance to round up the wagons and build their defense. Better to have a lawyer come in, and then they can't really pull that because I don't know, there isn't much How much discovery is there in these arbitrations?
Well, there can be quite a bit. I mean, there can be quite a bit. So when we file the case, again, this is what the lawyers that do this work every day, that have a full staff, have the infrastructure, we're always fighting for documents. People think that, arbitration simple. It looks a lot more like court than it did 20 years ago. Filing motions to compel discovery, fighting about witnesses, fighting about documents, fighting about, whether the claim is legitimate, motions to dismiss. There's all kinds of motions in arbitration. It's supposed to be faster, efficient. It is faster than court most times, but we're always battling for documents. There's, the supervisory documents, the trading documents, the employee's record, the office supervision records. I mean, there is emails, texts, subpoena documents from third parties. These are very, very time intensive cases that require a full team of lawyers, because you're going against Wall Street. Wall Street has more money than any industry. They've got the most sophisticated, smart, savvy lawyers on their side. They didn't hire the cheap lawyers with no infrastructure, run around with their head cut off by themselves. And you got to hire an army of a legal team to level the playing field, in my opinion.
Yeah, it's definitely David and Goliath. There's no question about that for sure, David. Hey, one piece of advice to any of you listening out there: if you believe you've been defrauded or improper trades have taken place on your account, unauthorized trades, one piece of advice you give those people, David?
Call a lawyer or call somebody that you trust that's not the brokerage firm. Might be your accountant, might be your family lawyer, and say, look, I need help. Please look at this. And there's a couple things you can do to minimize the chance you'll ever get there. For all elderly clients that are retired, they should have an extra contact person on their statements. My mom is 80 years old. She lives by herself in Florida. I get copied on all of her statements. She doesn't have a lot of money, and I can't trade, but I get copies of her statements. So I am able to look at them. I get them via email every month, just like she does. She doesn't look at them, but I'm able to see proactively if there's any problem. And everybody can do this. You can get on your parents, your aunts, your uncles. Obviously you need their authority. It doesn't mean you can trade. You can't take money out, but you can be just an extra contact person on there. So get on your elderly family's accounts. And also, one piece of advice: everybody should look up their broker on brokercheck.com right now. Before you hire anyone, if you're currently working with somebody, you can do it in your living room, wearing your pajamas. It's free. It takes 5 minutes. You type in their name, the brokerage account, where they're located, and you can see whether they've had any customer complaints, any regulatory problems, any employment history. It's the only industry I'm aware of that provides this information to the public. It is not 100% accurate. There are problems with it, but I'd tell you, if everyone did that, then the amount of people that would ultimately have a problem with their broker goes down substantially. Because the first thing I do when I get calls, we get 15, 20 calls a week from potential clients. While I'm on the phone with them, me or my staff, we're looking up the broker on the call. And if I see a complaint, I see a broker that has 30 complaints or 20 complaints, I know that if this person would have known what to do before they hired that person, the chance they ever would be in that situation to begin with ends. So, and I talk about that in my book. If people read the book, the chance and follow the simple steps I outline on what to do before you hire a broker, or if you're currently working with a broker, these steps you follow will significantly reduce your chance of ever needing to hire an investment lawyer like me. And they're pretty simple steps to take.
All right. Excellent advice there, David. Really appreciate that. Hey, if you got a question for David or myself, just send me an email to kl@kerrylutz.com. We'll forward it off to David. And David, people want to find out more about you, connect with you on the web. Where's the best place to connect?
We have a lot of information, a lot of resources available on our website, investorclaims.com. That's investorclaims.com. That's my law firm's website. My law firm is Meyer Wilson. And we have videos and blogs and articles about all kinds of things to help you, whether you think you might have a problem, to try to go things to look at before you even hire an advisor. So there's a lot of information and resources on our website. My book, The Investor Protector, is available on Amazon. And those are the the two best ways to dig in and learn more about how to protect yourself.
All right. Hey, and we'll have a link to investorclaims.com in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for our free newsletters. Again, questions for David, KL@kerrylutz.com. That's the email address. David, fascinating conversation. Wish you the best. Keep fighting the fight. We'll talk to you again soon.
Thank you, Kerry. It's great being with you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.